For more on whether that trade is in serious trouble, let's welcome in Tom Lee. He's Fundstrat's managing partner and head of research. Good to have you. You look at this market and you think what?
Well, Scott, I think the market, of course, is showing a lot of signs of jitters to me. The jitters in front of the SpaceX IPO and also just consolidating all these gains. Plus, we know there's a lot of future capital that's going to be raised by Google, Meta, OpenAI, and Anthropic. So I think the market's trying to sort of price all this in front of the SpaceX IPO, which is this Friday. I think it's healthy, though, and I don't think it's actually going to derail the tech trade either.
Well, what's happening in the chip stocks? Are they the ones where you think there's been the selling as most related to positioning ahead of the IPO that's coming later this week in SpaceX? How would you assess what's happened there?
Yeah, that's right, Scott. I mean, SpaceX is a $75 billion IPO, and because of its index inclusion into the NASDAQ 100, a lot of institutional funds are now going to have to raise funds to not only buy the IPO, but then to have cash available to actually position size, because they don't know if it's 4 times oversubscribed, they'll only get 25% of their allocation. But then to get a full market weight position, they're going to have to buy a lot in the aftermarket. I think that cash means selling some of the recent winners. I'd say the good sign, though, is that the memory stocks held above the Friday lows, and same thing with the semis. So I think that there's basically gut punches being seen there, but I don't think it means that those charts are completely broken.
Does the market need SpaceX to trade well in its debut?
Yeah, I think it is important, Scott. We expect it to trade well because it's an important company, and the Elon Musk himself is an N of one person, but there's also a pretty good roadmap for why there's a future growth and a very big addressable market. If it trades poorly, I think it's going to give credence to a lot of the skeptics who say, well, the market's topping, and this marks the top. I'm kind of going to lean against that because I've been hearing a lot of folks declaring the top is in. So I'd say as a contrarian, because so many people think SpaceX marks the top, it's probably not the top.
You think the uptrend is still intact, to be led by tech?
That's right, Scott. I do. I think that this is a dip that's going to be bought. As you know, we still expect this to be a 3-phase market this year where we have a strong uptrend. I think that continues for the foreseeable future. I do think there's a pullback later this year. I think it's closer to lockup expiry and that overhang. And overall, I do think it's tracking the way we thought, which is 2026 would be a tough year, but overall a good year.
But you're still looking for some Fed-related turbulence or volatility as well. You were talking about that more as a reason why the market would have a pullback more so than lockup expirations for some of these big IPOs. Have you changed your thought process there?
Scott, I think it is 3 parts that create that second part drawdown. One is the Fed, the market testing this new Fed chair, Kevin Warsh. I mean, he's going to make his debut this week, but it is really going to be testing his ideas of how to measure inflation and his path forward, and especially in the face of what might be policy that he pursues that is not in sync with the White House expectations. The second is, I think, the lockup expirations of all these large IPOs. I think that does represent supply. And the third factor, I think, is that as much as oil's the price has not risen as much as we expected, I do think there's going to be shortages developing later this year that the market's going to grapple with.